Welcome to Money in Motion by Trade the Chain. If you want more from CJ and Monte, subscribe to Trade the Chain and get access to the TTC community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description.
Hello, folks, and welcome back to another edition of Money in Motion. Today is Wednesday, October 11th. Interesting start to the morning. I mean, we had PPI coming in a little bit hot that made risk assets sell off for like 30 seconds, and then everything really got bid back up and is you really never know watching this show, especially if you're watching it live. Monte and I are always like I have my computer right here, but everything always whips around within the first hour, so it's tough to get a read. But regardless, Monte, good morning.
Good morning, CJ, and good morning to everyone that is watching in the chat. What's up, Mike? What's up, Keith? What's up, Ross? What's up, Phoenix? And today's, an interesting day. Bitcoin not looking too great, and as a result, the Bitcoin equities are pulling back. That being said, I wouldn't be surprised, like you said, the first hour of the day, it's hard to get a good read on what exactly the speculators are doing in the first hour of the day. I'm curious to see if Bitcoin continues its fall below this level. Anything below 27K, I think we need to be a little bit more concerned for a fall down to into the 25K range. But for the time being, I think Bitcoin's holding 27K rather well, all things considered. And I wouldn't be surprised at all to see it reverse and start to turn positive on the back of a positive move in the equity markets. And we can talk about that a little bit more as well. But if there's anything you'd like to start with, please feel free to do so, my friend.
Yeah, Bitcoin's quite pathetic compared to other risk assets or just things that could get any sort of a bid at all. I think this is 90s, actually. I don't know. I wasn't really around for pop culture there. Maybe you can tell me if you were. But regardless, is there anything? I have some niche assets we can talk about today. But I'll let you go first.
Sure. Yeah, one thing. So in our Discord community, I'm going to go ahead and pull this up real quick because I think it's important. Sometimes you set levels of taking profit and your target gets hit and assets continue to move. That's totally fine. Risk management is an important part of trading. So here's a look inside our Discord. On the 5th, we published a long trade insight for the Swiss franc with the goal of taking profit at the 200-day moving average. Now, if we switch over to the Swiss franc chart, you can see that today we're breaking above that 200-day moving average, despite the fact that I took off 1/3 of the market yesterday. I took off 1/3 of the trade at market close yesterday. Now, one thing I will say is that during yesterday's show, I mentioned if you didn't catch that trade, one thing that I think could plausibly be a good trigger for entry is a candle body close above the 200-day moving average. Bitcoin got rejected hard at the 200-day moving average. 200-day moving averages are important, and I think they're only important in the sense that a lot of people are looking at them. But also, it's not very often that you break above the 200-day moving average and you don't stay above it for at least some time. And same thing goes for breaking below it. As you can see, it did act as pretty significant resistance all throughout its negative price action in 2021 and 2022. And then once we got above it, we've managed to maintain that level ever since. So now that we're there, I think today, if we get a candle body close above this level, this is a good buy. One thing that's important to take note of is the DXY continuing to fall. And this is another one that we talked about as, we were talking about entering it back here, cutting it right here, and taking profit right here. This is one that I still think you can ride down. It's widely diverged from the moving average. And I think that because of that, we see this come down towards 104, and give risk assets a bit of room to breathe. That was my kind of thesis for last week, and I'm standing by that. I still think that despite the fact that today looked a little sketchy to start the day, I think we see risk assets rally. I think, and I'd love to get your take on this, CJ. Things like Coinbase, even though they're down a little bit today, more specifically, the miners down big, Riot and Mara. You can see Riot getting rejected off that 200-day moving average pretty hard. It's obviously a critical level if you see this sort of distribution above it. But what do you make of the crypto-related equities here, kind of showing a little bit of weakness, despite the fact that the NASDAQ is up on the day and ES is up, although it is just a small amount?
It's just kind of one-day price action. I don't know if I can have a lot that I can glean from it, but I will say that, just to reiterate what I said at the start of the show, it's just weak. It hasn't gotten any bids with the NASDAQ. If you look through the past 3-4 days, we've always kind of talked about how if equities make new all-time highs and they suck a lot of risk on price action back into the market, that should be the catalyst to ultimately send crypto equities higher as well as crypto, because that's when you have risk on price action. Maybe we just haven't seen that yet. Maybe that's what it's going to need to take in order to push Bitcoin into new highs. But then tomorrow there could be a short squeeze, or I'm pretty sure Friday there's a ETF approval dates where they have to either postpone it or make a decision. So that should be influential, maybe to some degree. But I don't have a good read on crypto right now. It's boring. It's not really moving. It should be going up with equities, but it's not. So, yeah. What do you think?
Yeah, I'm in the same boat. I'm not trading Bitcoin right now. What I will say, though, is I think ETH actually looks pretty interesting here, in terms of a potential long, because it's been falling hard. There's no doubt about that. Let me pull up the chart. But now at least you have defined risk, right? Anything below right here, you cut it.
May I just say something?
Yeah.
So there's a very popular YouTuber, not the one I sent you this morning, Monte, but another one who actually made a video yesterday called Ethereum Capitulation. So I always love when that is it's always a nice tell that, all right, maybe if we don't keep going down, we're going to go up a lot. Very simple.
Yeah. Yeah, it's quite the analysis. But, looking at the ETH chart, it got beat up so bad on the back of that buy the rumor, sell the news of the ETF. Nice mug. But now, you have defined risk here at the level of about 1550. This is where my stop loss would be. And then it's not very often that you see, and Nick and I talk about this all the time. Talked about it yesterday extensively. But ETH BTC, look at the strength that this pair is showing. This is what I think is really important. And a snap back into this channel, or at least towards the moving average, which I think is likely, would mean that ETH is going to outperform Bitcoin over the next, however many days to weeks. So I think an ETH BTC long actually looks very good here. So if you wanted to create that synthetic pair, you could do so. Or if the brokerage or exchange you operate on allows that sort of pairs trading, I think ETH BTC is looking very nice here. at least up back towards the top of the bottom of the wedge here, or even towards the 200-day moving average. So I think when you're looking at this trade, it's really important to look at the underlying. And when you look at ETH, right, just straight up ETH USD, it's at a highly critical level. I don't like this chart. It's at a highly critical level, and I think that we see a reversal here. It's not very often that it is so far from parity with Bitcoin, but Bitcoin is not too far from its moving average. Got rejected off its moving average. I think we see ETH start making a run back towards moving the 200-day moving average, and because of that, I like the risk reward. Like I said, as long as there's defined risk, I'm happy to take the trade and see where it goes from there. Anything below 1550, I'm cutting it. But in the meantime, I think that this Ethereum, even though Bitcoin is weak, I think ETH could show strength into Bitcoin's weakness, and kind of come back to parity while the market situates itself. Do you have any thoughts on Ethereum?
Oh yeah. Just that ETH BTC chart there. This YouTuber was going on it for probably like 20 minutes, looking at it from like every time frame, like the monthly, saying, look at this gap down, and that it might not even be wrong, right? Going into 2024, that belief might be true, but it's so extreme in the short term. And like it almost kind of was capitulation with ETH the other day, watching it go down, like 5% when Bitcoin was down like 1 or 2%. I can't believe I'm saying capitulation with those types of numbers. Markets really come a long way. But anyways, not saying it can't go down or break new lows, but it looks really primed, or at least the risk reward looks really well defined to the upside. And I think the sentiment is really aligned with that idea as well. Not a trade that I'm in personally. I do have crypto exposure in other areas, but I do think that's interesting. Some new viewers. Welcome, guys. But yeah,
yes, welcome.
I'll hit some charts if you don't mind.
Yeah, please go ahead. I only have one more thing to talk about, and then that's basically all I got for today. We do have an AMA today. Don't forget, to anyone watching. Very excited to do that. It's been a while. But
yeah, that's for Trade the Chain members. If you're an existing member, you'll get a link in our Discord today. If you would like to get access to that without joining up for the full TTC membership, we do have we're going to give that ability to our YouTube members as well. If you look at like the YouTube join function. So that's one of the benefits that we will be making available to members today. So we're looking forward to our first one and getting a lot of questions from you guys. And, it's all about community building and stuff. We did that at Market Rebellion a lot, and, we're happy to kind of continue it with that community. But anyways, let's get to some other futures trades. I don't want to take too much time on this because I know not everybody trades futures, but I wanted to go one trade that I missed, but may still have some potential if we begin trending here. And that goes back to the cotton market. When we look at things like gold, like the Swiss franc, we have very similar setups, except in the inverse. So if you look here, we obviously have specs who are very short, and everybody else is getting long. I think that a lot of people have been looking for this kind of commodity echo bubble that we've seen in a lot of other things like oil and some of the other grains, and it just hasn't hit cotton the same. And now we're starting to retrace to the bottom of the range, and it looks like it did trap quite a bit of longs up in these areas. So not one that I took personally. I did kind of miss this one. Perhaps we still go back to the midpoint of the range or the bottom of the range before all of these longs kind of get back to a neutral territory. But either way, kind of an interesting setup there. So I still think energy is a sell.
I was going to ask you about oil, heating oil, XLE, NRGD, all of that, because really been whipping around this week. But what do you make of these of the energy sector?
So these are still crowded. I mean, we squeezed a few longs out earlier in the week. And the data of next week that comes in Friday to see where the positioning is will be interesting. But I imagine we still have a decent amount of longs in here, especially. Remember, I gave that antidote yesterday of one of my friends who kind of hit me up and doesn't really talk about the markets. And I'm not trying to rip on him. It's just that clearly that's the sector which is drawing the most attention because of the conflict and because of the war. So everyone's talking about it. Makes sense. However, that could coincide with like the zenith of momentum. Sorry, I needed a better word for peak. I won't
zenith.
I won't say that anymore. I'm sorry.
You sound pretentious.
It is it was actually one of the most intelligent things I ever heard in college from one of my professors. He says, use short declarative sentences. Don't use extravagant stuff. Don't use pretentious language. Make a point clearly. And anyways, I still think this is a sell. You know, we have the gap here. You still have the positioning. At least you have defined risk at the top of the uptrend here. This is not one that I've taken personally. You know, we were lucky to capture the move earlier on last week. This has been a really good month or a really good last 2 weeks. Not all of the weeks are like that. So, you know, you kind of got to be grateful or just like aware of the current market environments. It's given us a lot of volatility over the past couple of weeks. But regardless, you know, let's just put it this way. If this is the echo bubble and it's over for energy and we go back to some mean level or neutral level for heating oil, this would look roughly about 230, and CL this would probably be about 60. I don't know if we'll get there. There's obviously a lot of supply issues, but nobody really knows how those supply issues will be resolved or how the fundamentals will be resolved in the energy market. However, what we do know is that the positioning is that it's still tilted in my mind to the downside. So if this is the echo bubble, if this is the top, the risk is still to the downside, or the risk reward is still optimal to the downside. But
yeah, I agree with you. Would you mind pulling up soybean oil? That's the last.
I deleted it from my watch list. I can't look at it anymore. Sorry.
Oof. That's how you, man.
I'm actually going to walk out of the room for this section of the show.
Feel free.
I'll be right back, ladies.
Take a walk. Take a walk. Go get yourself some coffee. I got this. All right. Well, unfortunately, CJ didn't catch this trade, despite the fact that, you know, he had been talking about it and watching it very closely all throughout the last couple of weeks. But as you can see here, this is one that we published Trade Insight for, with the stop loss being here at around just below $60. This was the entry point here at 56.80, and the take profit is down here. We're getting close, but we're starting to see signs of a potential reversal in soybean oil. And what I will say is that take note of this big wick that we saw down here. After this massive sell-off, there are people that are willing to buy below this level of about 53. So if you did get in on this trade here and you entered at 56, I don't think it's a horrible idea to take some profit off here. And I would even say take off more than like the Swiss franc trade. I took off 1/3 of I put in the Discord, taking 1/3, you know, as profit, moving stops to break even. I think in this trade, you can do the same thing. Move your stop loss here to the entry of the trade and go ahead and take a little bit off the table, because we're starting to see signs of a potential reversal. And if we do get a reversal, you know, we could see some mean reversion back up to the 200-day moving average and then get rejection and move back down. If that's the case, I would be looking to add back, you know, on a bearish engulfing candle around here. But that being said, if you were in this trade with me, I think today is a good day to take a little bit off the table in the just in case it does bounce, because we didn't quite reach our target. But, you know, sometimes I always talk about how you have to be very rigid in your trading. If you set your stop loss, you cut at your stop loss. If you set if you set your take profit, you take profit when it gets to that price. But one thing I am okay with is taking profit a little bit early. I think that being conservative is never, it can hurt you, yeah, but it's not going to lose you money. And right now, this market is in a spot where not losing money is a win, and making money is a mega win. So if you can take profit before the target, I think that's okay, because it is showing signs of potentially reversing. And because of that, it's leading me to believe that I should go ahead and take a little bit off the table just in case it reverses and heads back towards that moving average. So even though it hasn't hit the target, that's one time when I kind of go against the like the disciplined element of like the robotic trading style. But in this market, you got to take every dollar you can, every percent counts, and that's why I'm okay with taking profit before the target from the trade insight. So that's all I got to say about that. But I see you're back, CJ. Got yourself some coffee. Anything else you'd like to add?
Yeah, that's probably one of Monte's best qualities as a trader, I would say, is that he never takes anything for granted. But yeah, the reason I had to step out of the room in ZL, I mean, we had talked about it. For those who didn't have the context, we had talked about shorting that trade for past couple weeks. And then I talked about exiting it because of two reasons: the dollar, and then soybeans actually being, the brother of soybean oil, being crowded in the inverse direction. So basically, I was kind of making a case to cover the trade. And then I think within maybe half an hour after the show, it went down 2%, which is a big move.
And to make it worse is like I took the trade on the back of his analysis.
Okay. All right. This is very important because a lot of young traders don't get this. I still struggle with this, but listen to this sentence very carefully. Write it down if you need to. I did not come up with it. That's why you should write it down.
Get a pen.
A mistake is not something which is determined after the fact. So trading, all that it's about is doing the right thing every time, every day, over the long period of time. There's going to be instances where the right thing to do was close the trade, and then it completely runs away on you. Like oil and you look at CL and heating oil last week. I closed those a day early, and the day after those, they fell. And I almost deleted them from my watch list like ZL because I couldn't take the pain. It's like you made money and you still are finding a way to make yourself feel better. It's like, are you a masochist? Just step away from the charts. You did the right thing. So focus on making the right decision and repeating it over and over and over again. And don't worry about the stuff you didn't miss. Nobody catches every move. And you don't know what's going to happen. For instance, oil and heating oil are back above where I closed those shorts. So it ended up working out, even though I was temporarily hating myself for it. So I see these traders who will say something like, oh, I'm crying because I missed the move. Fuck that, man. All right. Just focus on doing the right thing. You got to understand a lot of this is random. Anyways, that's all I got for today.
That was one of your better rants, I got to say. That was a good one. But yeah, no, I couldn't agree more. And that'll happen. You'll miss trades. No one catches everything. There's literally thousands of possible trades to catch. So you can't worry about the ones that you miss. You can only worry about the ones that you're in. And like CJ said, sometimes even like everyone's hindsight is 20/20, but sometimes doing the right thing doesn't equate with getting the most profits. If you have a system in place and it hits your target and you take profit and it runs away on you anyway, you still did the right thing. You did the right thing from a risk management perspective, from a trading, from staying in this game in the long term. Those things will happen. And, it's better than, getting caught up in the FOMO, getting swept away, and adding to your position like a lot of people will often do when the market starts to run, only to get burned badly. So I think that people really don't understand that making a great trade sometimes doesn't equate with, the profits that could come afterwards. So yeah, well said.
There's this one, you guys should read the book if you haven't, called Education of a Speculator. It's the Victor Niederhofer book, but he talks a little bit about how his experience was working for Soros. And he says, of any trader that I've ever worked with, Soros has the least regret of anyone I've ever seen. Work towards minimizing your regrets on a trade. He was, he was telling this, Niederhofer was telling this story of how Soros had this great position, in the 80s or something. And he was getting interviewed by the media, and he was up like $250 million on this particular position. And I think within 2 days, like, he closed it. And he spoke on that interview with like a lot of conviction in this one particular idea. But once the market like just ran away from him and pushed him out, he just got out and never cared about it, because there's always going to be something that comes along. And so, yeah, regret minimization.
Yeah. That's very important. Very, very important. And it's obviously a quality of George Soros, but I'd say it's a quality of every good trader, is like a lack of regret. When it comes to missing opportunities, when it comes to taking, your chips and cashing in too early, you can't have regret. Because like I said, and like you said, sometimes doing the right thing isn't always the most profitable thing. So understanding that is very important. But that is all I got, CJ. Anything you would like to add before we wrap things up here?
No, that's all from me today. Looking forward to talking with you guys in the Discord and hearing your thoughts on the markets as we kind of go through this week. But
Yes.
Otherwise, I hope you guys have a wonderful and profitable week. Yeah, we'll see you members for the AMA today around noon, I believe.
Yes, it's 12:30 Eastern time.
Cool.
We'll be kicking off the AMAs again, so hopefully we see you guys there in the chat asking questions. Any tickers, any option strategies you need help with, any commodities that you want to know more about, any understanding of COT data that you want. Like, this is your hour to ask questions. It's all about you. Be selfish. Ask questions. That's one thing that my professors in my favorite professor of all time, Dr. Tao.
The Buddhism teacher?
Yeah.
Buddhism is boring. You will be bored.
Yeah,
that's how he opened
that's what he said the first day of class. But I also had him for a philosophy class, and he highly encouraged us to ask questions. Like, that was like his big thing, was like, asking questions will make you smarter. There are no dumb questions. Only dumb people.
That's a better way to, because there are definitely questionable questions, like why did you ask that? Anyways, we'll see you guys same time here tomorrow or for the AMA. But thank you so much. We'll see you tomorrow.
Thank you for watching Money in Motion. If you want more from Monte and CJ, subscribe to Trade the Chain and get access to the TTC community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description. Thank you, everyone. We hope you have a